What's up, guys? I'm nobody special, and I've got my man Mitch the Mod here, and we are here today to talk about FTX and what looks like potentially another default brewing in the crypto space. I thought we were through with this one after all the defaults earlier this summer, but now it looks like there's a new one, and it involves FTX and Binance and this obscure name, Alameda Capital. So, Mish, you've been all over this one for a while. Who are we looking at here?
That would be Mr. Fried, better known as SBF. He is the actor and CEO of FTX.
FTX, Sam Bankman-Fried. All right. So this is the guy, if you remember, going all the way back to earlier this summer when Voyager went bankrupt and after Celsius and Luna failed and BlockFi was on the brink. SBF was the guy who came in seemingly out of nowhere with billions of dollars, and he backstopped everybody. Right? This is a CNBC article from back in June where, billions of dollars, he bailed out BlockFi and he bailed out Voyager. So for all intents and purposes, this was FTX during the summer. This was the guy who stopped the crypto contagion, right? You've got your fallen Luna, your Celsius, DeFi platforms like BlockFi, all Babel, all of them were going one at a time. And Sam Bankman-Fried comes in and he buys them all up. But now Sam Bankman-Fried, it looks like he might be the next domino to fall. And it all comes down to this company, Alameda Research. Now, Mish, we were talking about Alameda Research earlier this summer. Tell us about that story and where that came from, because I love this one.
So that story, we started talking about when Celsius and 3AC and all that was going down. We started trying to figure out who the players were. And we kept coming across this name, Alameda Research. And we're like, what is Alameda Research? And we're sitting out by the pool, and it takes us a good 2 days to go through and figure out who Alameda Research is. But they're the ones that made the holding company loan to Voyager to stay solvent for the extra 2 weeks.
Yeah, and I remember looking this up, and I zeroed in on this girl, Caroline Ellison, and I feel kind of bad about it, but I remember she was co-CEO at the time, which, red flag number one, co-CEO. Are we talking about a hippie commune here, or are we talking about a billionaire hedge fund? She's not co-CEO.
Co-CEO, the guy has backed away, so she's CEO now.
Right, she's standalone CEO now. But I remember looking at her picture and saying, I could see myself debating with Gigi on whether or not this girl is mature enough to babysit my daughters, let alone managing tens of billions of dollars and determining the fate of the whole cryptosphere. And, as I went through the headshots, I don't see a single person over 30 here. Now, I get it. In the crypto space, you're dealing with primarily youth, but this didn't smell right to me. I knew right away, like, there's got to be something behind this group. And we ended up realizing that this was really just a front for Sam Bankman-Fried, that this was his trading business, right? SBF is the one bankrolling this whole Alameda organization. All right. Now, this story broke on November 2nd, just a few days ago. This was on Coindesk.
Perspective here. Mish has been gnawing at this bone since June.
That's right. And it not only gnawing on this bone, it was maybe a week ago that we were talking, as we often do, and we were talking, I mentioned the bottom's not in crypto yet, and I always say the bottom isn't in until Tether pops. And you brought up Alameda a few times, and I remember, Mish, I got to give you credit here because I was very dismissive when you mentioned Alameda. I was like, nope, Tether's the big one. Alameda's just a symptom of the big problem, right? And here we are like a week later, and we're talking about Alameda again. So
my supposition is that Alameda is the linchpin for 100 altcoins dying. They have their fingers everywhere. You take down Alameda, and you're taking down numerous coins. They have their fingers in too many pies.
And it's funny you should mention take down Alameda, because it looks like, now this is not done yet. This is not settled. I don't want to be accused of fudding here. I know I'm going to get that in the comments. But it looks like this article here in Coindesk may be in the process of taking down Alameda, and by extension, the whole FTX exchange, which could start up that whole dominoes situation that we were in a few months ago. So Coindesk runs this article about Alameda, and on the surface, they got a hold of Alameda's balance sheet that said they had $14.6 billion of assets and $8 billion of liabilities. Now, the problem is when you get into the meat of this, that really the line has been blurred between Alameda and FTX. Just to give you an idea of the $14.6 billion in assets on Alameda's balance sheet, the single biggest asset is $3.66 billion of unlocked FTT. Now, FTT, this is the FTX token. An FTX token, it may turn out, is really nothing more than a Ponzi scheme, right? Sam Bankman-Fried's FTX creates this token that entitles the traders on FTX to discounts on fees. He encourages them to stake where they can earn rewards, all this stuff. It's this token that really just exists for the sole purpose of being used on the FTX exchange. And it looks like what happened is once Sam Bankman-Fried created a market for this token, he gave himself hundreds of millions and billions of dollars worth of them. And of course, some went over to his Alameda Research group, and they went out and they borrowed billions of dollars against those tokens. So they created their monopoly money out of thin air, and then somebody was willing to lend them billions of dollars against that monopoly money. And that's where it looks like they got the billions of dollars to bail out Voyager and to prop up BlockFi. It was all borrowed against these FTT tokens. So the problem gets into how they collateralized all this debt. And shout out to Dylan LeClaire on Twitter. He summarized this article pretty well. According to Coindesk, of this $14.6 billion in assets, use the term loosely, air quotes, $3.66 billion is FTT, $2.16 billion FTT collateral, $3.37 is billion, of which almost $1.1 billion of that is Solana. Solana is this altcoin project that SBF, Sam Bankman-Fried, propped up, and there's really only about 134 million of actual cash propping it up. So the problem here is almost all of this collateral is illiquid assets. And illiquid assets means if you try to sell them, you make them worthless. You can't get that money out of them. So the problem here is most of the FTT that's used as collateral, this represents most of the FTT that's in existence. So if you're going to say this loan gets called, say the bank calls up and says you got to pay us back, there are no buyers for this FTT because this guy, Sam Bankman-Fried, and his Alameda Research hedge fund, whatever they are, they own all of it. There's nobody to buy it from them. So they can't sell this stuff. Just the act of selling it is going to bring it to near zero. And the same thing goes with Solana. I mean, they own about 10% of all the Solana in existence. Well, if they sell 10% of the Solana in existence, the value of Solana is going to go to near zero. Right. So this story from Coindesk, which was very well summarized here by Dylan LeClaire on Twitter, this story on Coindesk is what set this whole story off.
Right. And I think we need to point out here that just because the market value is $3 billion, you'll never get $3 billion out of it.
That's right. And this is why these assets are so illiquid. There's just not enough buyers, and the act of selling this much will crash its value. They'll never get the $8 billion that they owe from selling these assets. Mm-hmm. All right. And then enter this guy. All right. This is Chenpeng Zhao, otherwise known as CZ Binance on Twitter. This is the CEO of Binance, which is a rival crypto exchange to FTX. All right. Now, Binance has worked with FTX in the past. These guys were buddies. They were in business together. They separated back in 2021. And well, CZ Binance comes out and he tweets this on November 6th. This was yesterday. All right. A few days after the story broke that Alameda's assets were illiquid. All right. Chenpeng Zhao tweets, as part of Binance's exit from FTX equity last year, Binance received roughly 2.1 billion USD equivalent in cash, which was made up of BUSD, which is Binance dollars, their stable coin, and this FTX token, FTT. So they split from FTX, Binance and FTX, Well, Binance walked away holding a lot of this FTT, hundreds of millions of dollars worth of it. Then he says, due to recent revelations that have come to light, we've decided to liquidate any remaining FTT on our books. So he's saying because of this article in Coindesk, we're out. We're selling FTT. And they own enough FTT to crash the price. Just read on a little bit more here. He says, we will try to do so in a way that minimizes market impact. Due to market conditions and limited liquidity, we expect this will take a few months to complete. So he's saying we know this is going to crash the price, so we're going to do it slowly to try to make sure we can get this done in a neat manner because this is an illiquid market. Binance always encourages collaboration between industry players regarding any speculation as to whether this is a move against a competitor. It is not, because these are rivals. Binance and FTX are considered rivals. Our industry is in its nascency, and every time a project publicly fails, it hurts every user and every platform, which is accurate. Now, a little later, CZ tweeted out this one, and this is a real shot across the bow at Sam Bankman-Fried. He says, liquidating our FTT is just post-exit risk management, learning from Luna. Luna, you may recall, is that coin, that algorithmic stable coin that went to $0.0000. So what he's doing here is he's saying we're going to sell this FTT slowly and carefully because we know it's going to be worthless. We gave our support before, but we won't pretend to make love after divorce. We are not against anyone, but we won't support people who lobby against other industry players behind their backs. Onwards. All right, so now what we have going on here is clearly a tit for tat between Chenpeng Zhao and Sam Bankman-Fried. All right, now you've got a clash of billionaire personalities going back and forth, dumping each other's assets, and you've got retail traders are caught in between. I just want to add that CZ Binance threw this one out there that a day earlier, Whale Alert on Twitter had detected 584 million US dollars worth of FTT being transferred over to Binance's exchange. And CZ Binance tweeted out, yes, this was us, meaning they had already set this in motion a day earlier. So once this is going on, along comes Caroline Ellison again from Alameda Research.
Who you might remember from earlier.
Yeah. And she tweets out, hey, Chenpeng Zhao from Binance, if you're looking to minimize the market impact on your FTT sales, Alameda will happily buy it all from you today at $22. Now, a lot of people were talking about this tweet yesterday. Let me just give you my impression of this tweet. This was not Caroline talking to Chenpeng Zhao. If she wants to talk to him, she picks up the phone and she calls him. Or better yet, she picks up her phone and calls her boss, SBF, and he calls CZ Binance. This is Caroline talking to retail traders saying, hey, I want you guys to go put in buy orders at $22 so I don't have to defend the price of my coin against this sell-off. All right, she's talking to the market right now. This is where the crypto space gets dangerous, because if the CEO of a publicly traded company were to tweet something like this out about his stock, that would be securities fraud. Okay, now this is crypto space and it's different and the rules are different. All right, but what she's doing here is she's trying to jawbone a $22 floor on this FTT price to prevent it from going below that. Why? Because I suspect that just below this level is where Alameda gets liquidated because their loans go too deep in the red. And then the FTT, they have to sell, FTT goes to zero, and they go bankrupt. And you can kind of see this on this FTT chart here, where I've drawn this purple line. That's the $22 level. And you see, we came down there and we touched it a couple of times. It's been support for a while now. A lot of people are speculating that somewhere just below this 22 line is where the fireworks happen. Now, this is the value of the FTX token going back over the last couple of days. Here on November 2nd, this is when the story broke, that Coindesk story about how Alameda was in these illiquid assets, and you see the value was coming down. And then yesterday, here is when CZ Binance made that tweet, and the value just started to fall big time. It was in free fall, and then came Caroline's tweet about how, hey, we'll buy it all from you at 22. And then there was a little bump. Now there's this wrestling back and forth. You've got a duel between billionaires. One is dumping and one is propping, and retail traders are caught in the middle. And by the way, Solana is kind of doing the same thing. Remember, Solana was the other illiquid asset that was out there that was on Alameda's balance sheet, $1.1 billion worth of Solana. Now, over the weekend, Solana's price ran up big time because the story broke that Google was operating a validator on Solana's network. Well, then as soon as this story broke and, well, let's just say the sell-off ensued and all of those gains were just wiped out right away. So what we have going on right now is basically a bank run. There's a bank run on FTX. Now, FTX is not a bank, it's a crypto exchange. But since FTX got in the business of margin loans and staking and borrowing money to buy up assets, FTX has, in a sense, become a bank where they have liabilities and assets and the loaning money of interest. And right now, people are pulling their deposits off of FTX. They're getting their Bitcoins, their dollars, their stable coins, everything. They're getting it off of FTX. So FTX is in real trouble here. And Alameda Research is in real trouble here. Just how much? This is from One Chayoku on Twitter, and he has been tracking the FTX bank run counter. Now, this is a few hours old, but as of this morning, $450 million had been yanked off of FTX in the last 24 hours, $687 million in the last 48 hours, and $925 million, just under $1 billion, has been pulled off of the FTX exchange in the last week. And it all traces back to this story in Coindesk about how Alameda Research is holding these illiquid assets. And this guy deciding to dump all of his FTX token, this guy trying to prop it up, and he's trying to use the romper room here, which is all of his little buddies over at Alameda Research, to try to hold it all together. Mish, what did I miss? This story is so messy. Did we get it all?
See, and it's so long. I think if we look at history, everyone always talks about this was the company that took down everybody else. And, whether it be Lehman or, whatever, right? I think we're going to be talking about Alameda for a while.
Yep. And that's a whole new bag of worms, right? Because, I threw this image up on purpose because this is an important one here. All right. We were in total crypto meltdown earlier this summer, late spring, early summer, right? Started with Luna, Terra Luna collapsed, and then Celsius went down. Celsius spread to Voyager.
Right. We lost Terra, we lost Luna, we lost Voyager, Celsius, 3AC. What else?
Babel Finance went down. BlockFi was on the brink of insolvency. They were falling one after another, right?
Tetherhead issues.
Yeah. And, I've been talking about on this channel for a while now that cryptocurrency has essentially become a derivative of the debt market because you've got so much leverage and so much loans and debt and these shady players that are creating value out of thin air and then borrowing against it and using it to buy and rehypothecate. And it's rot. It's rot in the crypto space, and it needs to be cleaned out in order for crypto to begin functioning in a healthy way again. And Sam Bankman-Fried was the guy who came in and stopped the dominoes from falling. And it looks like he did that by borrowing against his FTX token. And if that bill comes due, he can't sell that FTX token and get that cash back to pay his loan. So what happens in this picture, if you pull out that hand, dominoes start falling again. And it really looks like that is in progress right now. This is the rot of centralized finance infecting cryptocurrency. All right. They call it DeFi. They call it decentralized finance. It's not. It's centralized. It's everything that cryptocurrency was invented to fix. It's the greed and the abuse of the traditional finance system making its way into cryptocurrency. And that has to be unwound right now. And it's gotten to such ridiculous proportions that all of these multi-billion-dollar firms are failing one after another right now. So this may be just the latest story. And then if this one goes down, if Alameda fails and if FTX fails, then the question becomes, who's next? Who's the next domino after them?
Well, I think we also need to talk about once there's blood in the streets and you're seeing people on the news scream about how much money they've lost, That's when the regulators step in.
Yeah. And there's a lot of regulators who are just looking for an opportunity to do this. They're looking for an excuse to step in and say, see, you guys need the benefit of our stewardship, right? Because we know there's no greed and there's no crime in the stock market where the SEC runs everything, right? No, there's nothing untoward happening over there. And of course, the commodity space is totally clean, right? And price of gold and silver, they're not manipulated at all. The CFTC regulates them. So, of course, governments around the world will use this as an excuse to seize control, seize more control, ultimately try to roll out CBDCs, take even more control over people's finances. So, look, this is the 100,050th time I've warned you on this channel. Do not leave your coins on an exchange. All right. When you leave your coins on an exchange, you could wake up tomorrow and you could go to pull your Bitcoin or your Ethereum or whatever, your Luna off of FTX, and it won't be there. They will pause withdrawals. They'll say, oh, we're down for maintenance, or we're doing this to shore up liquidity, or we're doing it for your protection. They always tell you it's for your own good. All right. So that's why I always keep my Bitcoin in cold storage wallet. I've got all kinds of affiliate links down below here. I've got the link to the Ledger Nano, which is the cold storage wallet that I use. I don't leave my coins on the exchange. I buy my coins and then I pull them off regularly. I put them into cold storage. I don't mess around with any exchanges that use stable coins because I don't trust them. I use an app called Swan. Swan does not get involved in stable coins. I don't get involved in altcoins. I only buy Bitcoin. There are other projects out there that run hard, they run high, they run hot, they run fast, and then they sell off and they crash and all the value disappears. For now, I only trust Bitcoin. Make regular purchases through Swan. Again, affiliate links down low. But be careful in this space, folks. Just be careful. There is a lot of fraud. There's a lot of shady actors. There's a lot of shady characters. And maybe they're not outright crooks. Maybe they're not outright criminals. Maybe they're just reckless. Maybe they're just, just runaway ambition. What is it? An Icarus kind of story. It's entirely possible that they're totally operating within the confines of the law, but they're just getting too reckless. And this is the result of it. So keep an eye out for that stuff. And Mish, I want to thank you very much. You never let this story go. You stayed on this one even after I moved on, even after I was very dismissive when you brought it up on some of our phone calls. So awesome job staying on top of this one. Keep at it, brother. Anything else you want to add before we go?
No, find me in the wild. Get a market time.
All right, folks. Till next time, live small and dream big.